the hardest day to trade for the entire week. And that's only because we don't have much clear continuation throughout the entire day. But the saving grace was that it was effectively a 5-point chop. So I want you to see this. Right, this is what I've been trying to show you every day this week, right? Even with the chop, as long as you were taking profits along the way, you're able to still be able to make good 5-figure profits right there. And that's because the market has moved, well, quite significantly throughout the entire day. So let's take a look at the I'm going to show you this throughout the week. That's my intention for this week, is trying to show you about the propensity of how you can be finding profits in the charts. Now, Monday was tough. It certainly was. It got much easier on Tuesday, Wednesday. I will show you that later. Start of the day, once again, you see a strong buying continuation there. Usually I would miss trades like that if I'm not ready. In this case, I missed it too. That's fine, You have to be, more patient and wait for the algorithms to show itself. There could be a possible trade here once we started building that nested right shoulder of that pink algorithm that we identified. Otherwise, what you have to be doing is to wait for the pink to build structure like this, right? So if you don't see something like that, now if this blue algorithm, broke out, retraced, I would certainly have taken a call here. That's a beautiful one here, right? So the rejection meant something, and this was when we identified the magenta, and known as a tapering algorithm here. Now, you do see magenta starting to build some liquidity here, right? And this was very important to understand the, tapering in the sense of the rejection there. We had that pink algorithm, which we also identified. So this was a viable zombie trade together with the tapering of the magenta. And so that was my first entry, I think, 1021. It was here on the break. I didn't take it at the top because I wasn't too sure. I wasn't ready. So once I saw magenta starting to taper slightly and saw the precision algorithm in the teal, I knew I could manage my risks with either the teal or the pink algorithm here. And I saw magenta building the liquidity here. This would have been a beautiful micro structure here for a possible zombie and a tapering trade here. Right, took the trade here all the way down and quickly took profits. As you could see, you take your profits quickly. By 10:23, I took all my profits, and that was once we started bouncing back down from that large red candle. Now, usually I would just take more profits at the red candle because this would have been in the magenta bounce here. So quite straightforward there, right? So remember, take your profits, and this was 5 figures right there, right? If you notice, it was already 5 figures just from that one small move. And thereafter, right, you had to look for continuation. See the magenta if it continues to build liquidity here. And you see it started building that nested, right, structure. But interestingly, still within the pink algorithm. I want you to see that, right? The pink was ultimately still in control. But within this large pink channel, you notice it's the magenta that's in control. So you see, you can still find profits within the magenta while knowing that it is building larger liquidity in the pink. And so that was the second trade here, understanding this was a selling continuation. So the sellers tried to sell here, but failed to break through, needed to build more liquidity with the nested right shoulder here. That was from the previous head here. So this head and shoulder pattern formed a nested right head and shoulder pattern. And we had, once again, became quite clear because of the tail precision, right? So understanding the precision algorithm, you know that the seller is trying to sell, but failed to break down further. And we were supported by the pink, right? And this was when you need to be careful about shorting this further, right? So right here, how would you have shorted this further? You would have to first understand, right? So once we built that nested right shoulder here, and we built more liquidity here with the magenta algorithm, one possible way for this to head down will be like this, right? So I would have set alerts here, pay close attention if the bears started rejecting this pink algorithm again, all the way continuing down in that pink. So this would be a safe trade if it comes here, right? But otherwise, you noticed it never did because it started buying very strongly here. So when you know it's buying strongly, you know the seller has been outperformed by this particular buyer and it broke out here. Would you take a trade here? Possibly. If it started buying up in this orange, you could obviously manage your risks if you want to. But otherwise, I would always usually wait for some sort of structure to form, in this case with the pink, and you saw that possibility on taking a trade there once we started building more liquidity. Now very weak here, right, but still a viable trade. There's this one particular trade, well, that I truly struggled to get into position. It was around 1 p.m. So you notice I skipped the entire upward move in that magenta because you notice it's not in the strongest buying algorithm. It's so difficult to manage your risks. And this is why you have to sometimes avoid trading this. It's all right to miss this. Just set alerts. You know that there is some sort of tapering because you saw the yellow as well, right? We were also tapering in that yellow together with the magenta. So it's not a strong buying continuation. In fact, the bulls may have to dig deeper. And so this is the premise for a zombie trade in preparation if it's a bearish move as well. So let's see this difficult trade that I took 1 p.m. right here, right at the top here. So understanding magenta, you saw magenta, well, tapering. I know it's running out of steam, right? We also charted this yellow algorithm. You saw beautiful head and shoulder pattern. I just want you to study my trade timing if you can per candle, and see all these are inside candles in my entry here. And this is what I've been teaching you to do. It's about getting into position. Now, once you have protected sufficiently, you got into position. Now you can enjoy the bigger moves here like that. This was almost in 1-2 hours worth of tussling right here. Now, especially this particular move. Well, I got stopped out really bad here as well, right? So I ignored this because I've already had profits here. So it was much easier to just participate in the trade right here. And well, taking profits here, you notice it's not selling strong enough. Yeah. And it pushed all the way back up before it started pushing down again in the yellow. This was the final trade that I took right here. So it's about understanding, getting into position. This is a little bit more advanced. If you have time, you want to be, trying to find, in a way, can I call it scraping profits in the charts? You can absolutely do that. I'm trying to show you that. The point is, as long as you are defensive enough, you try to protect as much as you can to get into position and not trying to make it guesswork. Risks is something you can control. So you always remember that you control the risks and you let the market decide for you once you are in position, once you're in profitable position and you can manage your risks, you know where the structure stops. You're able to manage it accordingly then. So even that stop trade, let's take a look at the trade that I stopped right within a minute. 123. Let's take a look at that. Right here, 123. Why was I stopped here? Let's take a look. I took a trade here. I think 123. 124, sorry. 124. 124 to 55. Right here. What's the problem with that? 124.55. I opened the trade here. 124.55 and I closed it. Oh, this was a long one now. It's a 1 hour trade. Sorry. It's 1 hour, not 1 minute. It's a 1 hour trade. I opened it here and I allowed it to, well, coast down this pink algorithm. I didn't even protect it, you see. I got tired, isn't it? Hoping that it will go up, and it didn't. We went back up to 23 and I got stopped right here. This was quite substantial. So you see, that's the problem of doing this. Stamina, it's limited. I'm sure I took very few contracts here, so it didn't even matter to me. And thereafter, once I got stopped, I understood why I got stopped, and you continue to see magenta and yellow right in play, and so I re-entered here again. So when you understand your play, you're able to re-enter into a trade because it falls back into the parameters of your setup. So you have to understand this. And, well, the ideal thing is to protect the trade here, right? Isn't it? Protect it, leave my runners to die, and then re-enter here again. That will be ideal. But I obviously had, well, strong profits from the start, so I probably commented very small contracts here for the move down. So, look, choppy day. It is absolutely choppy because I would show you later Tuesday and Wednesday, and you realize Monday was a really tough day. But regardless, you don't need the market to move significantly in order for you to find profit. So always remember that. If that's a lesson for you this week, this will be it. So let's go on to Tuesday. Easier because there was continuation. Remember, if the market has some form of continuation, that's always the best case scenario because it's easier for you to, well, not require to do a U-turn in your thought process. So there's little inertia, and therefore this is why I say continuation structure is always the best. Another 5-figure day, I will show you that later. I shared my P&L on Wednesday for this one, I remembered. Now, the first one was the zombie, right? Understanding the, well, selling, you see it's a strong selling once again. Started tapering, major yellow level here. This was on the, well, 30-minute chart. Let's take a look at the 30-minute chart. This was quite an important level because this was at the, let's take a look at the 30-minute chart, right? This was here at the yellow algorithm, and you see that on Friday, this was, take a look, it's penny perfect. So preparing 30-minute chart, well, it's important you do that because if you don't do that, you're missing out on the major contexts, right? So understanding the yellow algorithm here, absolutely important. So this trade was quite a straightforward trade if you understood that, because you would see that selling, right? We identified orange as well, so require more liquidity to push. I caught the, well, very clear teal with them here, right, all the way up. It helped that there was a blue. So usually, if you're a newer trader, you see this selling at the start. It will be more inclined for you to want to chase a short instead of waiting and see if you can catch the bounce. So if you're trying to chase a particular trade just because it's going in a certain momentum, you feel you're missing out, you're still relatively a new trader, you have to mature in your thinking. And right, so understanding, hey, there could be a bounce, and you understand where's the liquidity for the bounce, and that's in the teal liquidity here that had to be retraced here. So even if you missed this early zombie trade, right? So this is a zombie for me as well, because if it wants to head down here, I could catch the move up to form that head anyway. And we had the blue, so that was lucky for me. And we had the green that appeared here. Now, once we broke out of the teal, this becomes easy because there was a certain retracement. Just take a look at the particular week there. You see beautifully right on that bounce off here. You saw that beautifully. The lack of the blue algorithm here, so I would have charted the blue here to continue it up. But in this case, if you took a call, you need to know where to base your supports on. In this case, you either base it on the blue, which is a level that's trending up. So you can manage your calls better, because if it's trending up, your price gets better. You're always in the profits until it gets stopped when it comes down. Or you have that teal here, because if it wants to build more liquidity, it needs to come down before it goes back up again. So it's much more difficult to manage this in teal unless you are already protected somewhere up here. So imagine you've opened a trade here, you protected it here, and you can manage it until it hits down on the teal before it wants to build more liquidity here. And so this is the essence of protecting your trade. It's absolutely crucial you do that. This went up, well, it just glided up in that blue. So if you caught a trade, this becomes very easy. Did I get the full move? Obviously not. I like to just take profits, call it a day. Yeah, right here I closed my trade once it broke out in that strong. But you see, this is, well, 5 figures right there for me already. So there's no need to overstay. This one I sustained it. Let's see what time I opened it. 9:44, right? Well, I sustained it. Well, it's the same trade. Well, probably vanity runners. Very, very small runners, I'm sure. Not a fan of holding trades for too long, but you notice, because this is deep in the money, I can't afford to do that. It's already in the strike range now. As I mentioned, I've been trading deep in the money because, well, there was a period of time I was doing 100% trades. Well, let me check. 100% trades using small account to show you. I will post a link somewhere in the Discord server where I did it for continuously every day for, I think, more than a month. That's to show you that you can get 100% trades even with small account. But because I haven't been feeling very well, not fully focused, so I had to, well, scale down my difficulty while trading, so I go deep in the money. Helps me much better. And so yes, in this case, well, I held the runner. Well, it's a good example anyway. In this case, held the runner throughout the entire blue algorithm right here, closing only at 11:39, which was right here. So held the blue and the orange. So this is an example of holding your runners, right? Because you have the algorithms to guide you. And once you have the algorithms to guide you, you're able to hold your runners in that case. So this is still absolutely beautiful. A good lesson on holding runners. It's difficult to open new trades, I would admit. One here, maybe, when you saw the pink. This was the first identification of pink here, so this could be still too early for you to enter a trade, but right here it's still possible. You saw the pink building liquidity here, maybe a trade here, maybe another one here. So it's still not easy. So sometimes you have to take advantage of situations like that. So you are familiar now that there are instances whereby you can hold runners. It's ideal for holding runners. and not ideal for opening new trades. There are times where it's not ideal to hold runners, but it's ideal to open new trades. So you need to, use the algorithms to guide you and know that there are different types of conditions in the market, and you will be able to capitalize and take advantage of it. In this case, holding the runners turned out to be absolutely beautiful here. So that's it. Quite a straightforward day here. Let's take a look. Did I share my P&L for that? That was Tuesday, isn't it? Yep, $26,000. This was Tuesday. Most of it, I believe, about $10,000 from that particular runner, just one runner, right? Probably $10,000 from that. It's quite straightforward, yeah. And Wednesday, another 26,000. I will talk about that now. Let's take a look at Wednesday. Now, Wednesday and Thursday are both selling continuation days. I'll take a look here. Selling continuation days. I will talk about them together. Selling continuation day. So Wednesday was a very easy day, I would say. Right? Selling continuation is always easier because selling is always more aggressive than buying. Particularly because people are offloading a position, they are not buying gradually. If you're selling gradually, you're tapering. So tapering takes time. So offloading, it's much easier. So I enjoy days like that. And you notice a lot of my trades are, I tend to favor puts more than calls for two reasons. Firstly, it's faster, right? If you're day trading, you want it swift, you want it quick. So there are people who day trade only focusing on puts. You can do that because, if you have a portfolio, you're already enjoying the upsides. And so when you're just paying close attention to puts, you are in a way hedging your daily position and protecting your main portfolio if you scale accordingly to what your portfolio risk is. So there are various ways of trading. It really depends on your trading strategies, what other means of trading or investing you are involved in. So let's take a look at this. This was Wednesday, yeah, 26,000 for that day as well. It's quite straightforward day, I'm sure. This day was easy because of the, orange algorithm that we identify. Right hand, yeah. So this was important because once we identify the orange, this becomes really easy. All right, we identify the orange, we identified the blue, right? There was this ping that's building liquidity too. So when it reached this top here, it started from green, right? And it became blue, blue. And then it started tapering into orange. Look for yourself. In this case, you had triple algorithms as a confirmation. And what's the precision? Teal right there. Clear short here. Right? Understanding, once again, if the buying has tapered from green, right, the buyers are weakening, and then we became blue. Right here, you see the blue, right? It's not going up. It's not building liquidity. You don't see the bullish control. In this case, the ping that we identified build liquidity. So a good long will be like this, right? It's not happening. Not yet, because we're selling in the teal. And within the teal, you notice that the buying has already weakened into orange here. This is absolutely ideal here for a trade. Why? Because we have resistance here with the orange. Now, if you were to be charting the microstructure here, the orange, you see the teal, this is your resistance. And you see the possibility of a micro head and shoulder pattern right here. Open a put here. This would be clear as day, right? Because firstly, tapering confirmation, right? You saw the teal as a resistance. You saw orange and it's in control. There is even a retracement from that green candle here, right? So you can obviously take a trade here if you want to protect it by then. See orange rebuilding more liquidity together with the blue, right? The microstructure here, let it head down. And this is the blockbuster because of the green precision algorithm that started appearing. So you see, you got into position because you understood some form of tapering. And that's only because you are able to identify the orange algorithm here. Now, how does this go up? Once again, You know that there's a pink, right? You have to wait for pink to rebuild liquidity here. It's not happening. There's no reason for you to go up here. Who's in control at this point here? You cannot be assuming or just assume. You're assuming. Don't assume that this is the head of the inverse head and shoulder pattern. You have no instance of confirmation that the pink is actually building the liquidity here. You don't. In fact, it's orange that's still building the liquidity in that teal on the way down. So if I want to see this go up, I must at least see this teal algorithm grabbing liquidity, breaking out here. Right? Teal is not even broken. It's the sellers that are in control. Right? So this trade, if you missed it, absolutely fine. I told you. Well, set your alerts in the 20-day moving average. Went all the way down here. And all you had to do, chart the orange. You see it buying in blue and then dumping down in orange. Dual algorithms. Something I talked about in the previous episode. And this was beautiful because it's still in that teal. Absolutely beautiful trade. And the selling was aggressive. You could protect your trade very easily. And, well, even if it's a zombie or it's a head and shoulder pattern with dual algorithms, we have a very clear level here as your shoulder. Once we rejected here and we rejected orange again, breakout retrace off that 20-day and off that orange. If you wanted to chart a microstructure here, you absolutely could. And you should see, absolutely beautiful. This was such a blockbuster trade. I don't think I was around to catch that. But regardless, already made my money for the day, so don't be greedy. And you see, the point about this is that you know that there are profits to be made every day. And when you don't approach the market with a heart of greed, you don't force trades. You will be more, you will have the tendency to be more patient because you know you can do this every day. And such a mindset accumulates daily. So your performance every day will be, in a way, stabilized and consistent. So it's important you have that mind instead of being, riled up by the market just because it made some moves. But regardless, it was a beautiful trade. If you set alerts at the 20-day moving average, this would be a clear trade for you, right? So once again, if you missed this top here, don't worry. The market has given you the clues for orange, which I already showed you long time ago at 9:37. Look, it's the same orange algorithm that we already identified then. That happened. Look for yourself. So you can always prepare ahead once you identify the algorithms, and even if the algorithms are not the most precise, because you identify them early, maybe there's some variation later. Once you retest it, you can do your adjustments then later. Understanding the key levels are very important, the ranges, so you avoid your chop here. Right, so quite straightforward day here. Yeah, right. So this was, $26,000 for the day, right? And that was missing out on this. So absolutely beautiful day. Look, Thursday, it's the same exact selling continuation structure. Selling, once again, I mentioned, selling, not necessarily selling, but any form of continuation, it's always much easier for you to take a trade. Thursday, let's take a look. Thursday was straightforward because we identified the magenta. That was important. Just one trade here, that's all I need. Right, understanding the magenta, even if you missed the entire day, that's fine. Right, so continuation is always the easiest. Right, identify the magenta, you saw the orange starting to build liquidity. Magenta having the dual algorithm here, just take a look. So from orange, you see how it has tapered within the right shoulder to magenta. Once again, this is a very clear dual algorithm from orange to magenta, isn't it? And take a look. Pink protected you from going long, right? Because if you wanted to go long, it will be like that. It will be absolutely beautiful. Pink protected you from going long. You can see that. Now, if you're seeing the pink and you think to go long, instead of understanding that the pink protected you from going long, you need to understand the resistance. You cannot take calls at resistance. Breakout retrace, yes, this, go long, no problem. But also because I don't see any liquidity here from the bulls, because you see that strong rejection here. So you don't see clear liquidity, right? Where's the liquidity? Liquidity will be something like that. This is liquidity, right? Because this is a volume of orders. When there are inside candles, it means that there is accumulation of orders here. One candle is probably about 10, 20,000 orders, figuratively, not literally. And if you have like 10 of them, that's 200,000, for example. So accumulation like that's important. This is not an accumulation, right? This is a lot of orders over a larger price range. But if it's a small price range here, you see this. Now, this is a concentration of orders. So this is liquidity here. So understand that. Very important, right? So pink prevented you from going long. Can you see that? Absolutely beautiful. So if you went long here, instead of waiting for the blue algorithm, for example, we saw the blue breaking out. So you need to see blue, right? The blue got stopped out here. It's not even activated. You cannot go long here unless it breaks out and continues in the blue. So understanding the precision, who's buying? You have to understand who is buying. There is a certain institution that's buying and you want to follow the trade here. But otherwise, absolutely beautiful trade here, because instead of seeing the pink, you are also already prepared to see the magenta. By then, we already prepared. 1044, way ahead. 1044 is here. We already saw the magenta. Right, so you saw that happening here. This became very, very beautiful trade. Absolutely beautiful. And that's only because also we saw the selling in that, well, green and teal. So you saw a variation of green and teal. So it was very easy to manage your runners, green and teal. Right, so easy to manage your runners here, all the way down. Right, and once again, if it went down, right, you could have multiple entries here. Magenta, once again, and orange. Dual algorithm setup here. And this was when we identified the pink. So you would have charted the pink here, right? Diligently, you would have done that. Once again, orange and pink. This was at 5 days. So you would set your alerts at 5 day, set your alerts at 20 day. Likewise, again, you're always ready, right? And I think I prepared you for this too. Let's take a look. What's the 5 day moving average? Well, I called it a day early that day. Yeah, that's fine. But it's the same setup here, right? Magenta, 5 day rejection from the 20 day here. Clear as day, right? If you were to chart more diligently here, right, you would have been able to see how the orange was also building more liquidity here. Magenta tapering at the range. So absolutely beautiful trade here. Near to the end of day, we didn't build enough liquidity, so I wouldn't trade this, because you would see once you identify the pink, this is just a liquidity wedge to close the day off that 5 day, off safety. So be careful. That's not always a trade to take, but of course, if you want to take the bounce up to 5 day, that can be arranged too. So once again, continuation trade becomes very simple here. And let's talk about Friday. Friday was quite straightforward. So Thursday, 30,000 Thursday. You understand that I could make 6-figure, I think, if I caught the tail end of the move here. But it's fine. You get enough money. You call it a day. Friday, I just took one trade here. That was, thank you for allowing me to rest throughout the week. I truly appreciated it. I needed it because I was on some sedatives. So Friday, just one trade, 5 figures. I just want to show you that it's possible, just one trade, that's all you need. And Friday was quite a straightforward day. Yeah, because we saw the teal building liquidity here. Quite easy. And then the pink over there as well. So once we closed the cup, we started building more liquidity here, and you saw the retest that was quite easy. And once we identified the pink here as well, you saw the market just building liquidity. This was quite straightforward, all the way to your 20-day moving average. Grab the liquidity. Then we died there because it's a Friday. We got back to safety. And also, if you were studying Sunday's videos, I talked about the range at 665 and 640 at the bottom. So we were protected in that range by the 20-day moving average. And so unlikely it will head up. If it heads up, it will. But if it heads up in the final few minutes, I would certainly take a put all the way back down because it wants to keep it within the range of 665 and 20-day moving average. But unfortunately, we didn't break out there, because if it broke out to 667, for example, I would certainly have shorted that near to the final 10 minutes. Understanding that you know that there is, well, this is called the market imbalance, or the markets find some sort of balance, especially the imbalance of the options. Friday was straightforward because we understood the teal is just building liquidity. You don't see magenta, the only short here. I took a short here. In fact, my $10,000 was from a short because I saw the, magenta and orange starting to rebuild liquidity here. So this was quite messy, but it's still easy to see the magenta. I think my $10,000 was just from there. Take a look, 1049. That's right. I saw the magenta. I saw the orange. Yeah, that's it. $10,000. That's all you need, right? So understand this. That's the microstructure I saw, guided by the blue algorithm. So that was a straightforward trade. We like continuation because I understand that it was teal that was selling, and which was quite dangerous. Because if we do not build more liquidity with magenta here, if we do not build more liquidity with magenta to head down, then it's not heading down. Now, this retest here, this is dangerous. Right. In fact, if I were trading this, I would certainly have taken a call here. Right. Let me explain. Because once we had magenta in place here, it didn't break down below. There was blue trying to break below, and we failed breaking down. There was, you see, the bears tried to push this down without a clear structure here. So once we bounced back up to that teal and we broke the teal, I would have certainly taken a call here. Now, this is a failed continuation, right? Because there is a lack of liquidity. However, if this built liquidity like that, so I would have taken call here, but I would have protected it as soon as possible because I treat it as a zombie and hoping it either goes down like that or it continues up with my runner in that blue algorithm. So you see, you're positioning the trade. You're not trying to guess the direction. I know there's a position I can get in, protect it, and hope for the best. Either way, I win. You have to be planning your trades in that manner, right? So you see liquidity here, right? If this heads reject and we grab more liquidity on the way down, it's either in the green or the teal. I'm ready for both ways, right? But I got a trade here because there's a failed continuation in the teal, and I have the blue buying to break out from that pink. Now, if teal and pink already brought you up, 5-day moving average here, right? Close the cup. You saw the handle forming. Now, this is a no-brainer, isn't it? You saw the teal and the pink building more liquidity here. Now, the difficulty is catching this trade because it's, well, scooting down. If it's always going down, you have to get into position. Now, remember my Tuesday trade about getting in position. Sometimes you have to struggle getting in position, right? Or just take a spread. You can take a debit spread and, you can do that safely. Or just sell some credit spreads here at the bottom range if you think that it's heading up here. So something safe, you can play that as well, right? Selling some credit spreads, put credit spreads here, knowing that it may be heading up with the handle. So you don't have to manage it too much because time is on your side because you're on a credit spread, knowing that the pink is building liquidity here. But this is dangerous too because you see it selling. I think you've seen this on Thursday, just on Thursday. Selling down. Right? You see the difference between the two, even though the structure is almost similar. So there is some some risks to this, and you just have to know how to manage. There is no certainty, as I tell you, in trading. There is no certainty, but you must have the skill to be able to explain how to trade accordingly, so you can prepare your setups accordingly then. So if this wants to go down, right, I would need to know my magenta, I'm ready, because there's liquidity here, right? So if this heads down, the sellers decide to push this down, right, push down in the blue, I'm ready. I set alerts here. I could have caught the trade here as well. So you see, I'm ready for this, and I'm ready for this, right? But for this, I would very much prefer close 5-day, right, and have a certain retrace here. You saw the engulfing candles on the retrace here, and this would have helped because I saw blue in control, building more liquidity, and blue continuing control. So make your own judgment. You don't have to be catching the entire move, right? So if this blue helps you confirm this retracement of that 5-day moving average, and I managed to just catch this move, that's good enough profits for me. So using information here to catch this trade here, you don't have to catch the full moves. Remember that. I caught this small move here, and that's $10,000. So yes, understand, trade your plan, right? Plan your trades. It's not about catching all the moves. It's not trying to outsmart the market. You're not trying to do that. You can never be smarter than the market. I can tell you that. So don't fight the wrong battles. In this case, you just have to find money, find profits in the charts, feed your family. That's our goal. And when you are able to, simplify your goal, you can achieve it much easily. So thank you very much for watching.